Did you know that amidst economic uncertainties, star investor Cathie Wood remains ultra bullish on Tesla stock? Although Tesla has hardly even recovered from last year's dips, Wood shared her belief that Tesla stock will go 5x its value in 2026. You surely would not want to miss this. The EV opportunity alone is enormous, star investor Cathie Wood said in a January 7th tweet. This is in response to ARK Invest Director of Research, Autonomous Technology and Robotics, Sam KORUS's tweet, which Cathie retweeted. In the tweet, KORUS said that Tesla's margins, superior drivetrain efficiency, and low battery cost should make it one of the best positioned to weather any cyclical slowdown for autos. As it has done in the past, it can be the first to lower prices, which puts pressure on other automakers, the ARK executive said in the tweet. To this, Cathie Wood said that according to ARK's CFA Tasha Keeney, Sam KORUS, and ARK's research, Tesla does not need autonomous ride-hail to be a success. According to Wood, Tesla's EV opportunity alone is enormous. Presenting ARK's research, ARK's Director of Investment Analysis and Institutional Strategies Tasha Keeney said in a tweet, "Removing autonomous driving and any form of ride-hail, which we believe will drive over 60% of Tesla's value over the next 5 years, our 2026 price target would become roughly $500 a share post-split, based on EVs alone, more than 4x increase from current price." It can be noted that ARK Invest published the Tesla valuation model in mid-April. ARK's updated open-source Tesla model yields an expected value per share of $4,600 in 2026. However, note that the Tesla model was published before Tesla executed a 3-for-1 stock split in August. According to ARK's updated open-source Tesla model, Tesla's prospective robotaxi business line is a key driver by contributing 60% of expected value and more than half of expected EBITDA, or earnings before interest, taxes, depreciation, and amortization in 2026. Across the simulation set, they expect electric vehicles to constitute 57% of the company's revenues in 2026, although at substantially lower margins than the robotaxi revenue. Because of ARK's increased conviction in Tesla's ability to achieve full self-driving, they have to be updated with how the robotaxi business feeds into the model. Although in the past they predicted that Tesla will never be able to launch autonomous ride-hailing, recent positive innovations from Tesla made them change their mind and assume its launch in 2026, 4 years later than Musk expected. They also suggest that Tesla will commercialize autonomous ride-hail in 2024. However, in 9% of their model cases, Tesla does not commercialize robotaxis within the 5-year window. If and only if robotaxi commercializes within the forecast window, the modeled financial results for Tesla are susceptible to the year of launch. ARK Invest's updated model also increases Tesla's capital efficiency. Tesla's capital expenditure per incremental unit of capacity had improved from around $84,000 in 2017 when the Model 3 was ramping up to around $7,700. In last year's model, they estimated that Tesla would spend $6,000 to $8,000 per incremental unit of capacity in 2025. Given its much better than expected capital efficiency, it may be safe to assume that Tesla will spend $2,000 to $7,000 per incremental unit of capacity in 2026. The ARK Invest team also pointed out that they expect Tesla's robotaxi to be a game changer for the company. By 2026, if Tesla successfully launches robotaxis, the expected value is the average of all 1 million simulations. Said simulations are highly sensitive to the year when Tesla finally launched robotaxis. In most of ARK's lowest price per share scenarios, Tesla launches a vertically integrated human-driven ride-hail service, but does not launch a robotaxi network, while in other scenarios, Tesla does not launch either service. While the company has not committed publicly to launching human-driven ride-hail, ARK detailed previously the strategic and tactical advantages of doing so. Importantly, human-driven ride-hail could become a profitable recurring revenue stream before Tesla launches a fully autonomous service. For cases in which Tesla launches a human-driven ride-hail service and solves for fully autonomous driving, ARK assumes that its human-driven ride-hail cars will transition to the autonomous ride-hail network over time. If it is unable to launch a robotaxi service within 5 years, Tesla still could launch a human-driven ride-hail vehicle while trying to solve for full autonomy. However, ARK's executive's recent tweets showed that even without autonomous driving and any form of ride-hail, Tesla's value over the next 5 years would become roughly $500 per share post-split, based on EVs alone, which is more than 4x increase from its current price of around $123 per share. Wood can be remembered saying, "We think that gas-powered vehicles are going to be obsolete within the next 5 to 10 years, and the traditional auto industry has to figure out a way to migrate into electric vehicles," in a Yahoo Finance interview. In a different interview, ARK Invest CFA Tasha Keeney shared the reason for ARK's positive stance on Tesla in a CNBC Squawk Box interview. Keeney said, "Electric vehicles are just single-digit percentage points of overall auto sales, so we have to remember that it's still an early market, but we do definitely see Tesla as one of the market leaders both in electric vehicles and in autonomy. Most other auto manufacturers, unless they want to lose money on their cars, most are not going to be able to keep up with or to reach Tesla's combination, so that's very important from a performance point of view and a range point of view," said Cathie Wood. When asked about her thoughts on Tesla in 5 years, Wood said that compared to other auto manufacturers, Tesla definitely has an edge. She said that if one analyzes cars not by brand, but by range and power combination instead, Tesla is the best pick among them all. Still, she said that most famous car brands like Volkswagen and BMW have done wonders in the last few years. It is just that Tesla is way ahead of them in terms of the range and power combination. Wood said that most other auto manufacturers are not going to be able to keep up with or reach Tesla's combination unless they want to lose money on their cars. Wood emphasized that that's very important from a performance point of view and a range point of view. When asked about her thoughts on large corporations competing with Tesla in electric vehicle production, Wood has this to say: "They are failing miserably. Branding is something different. These other auto manufacturers have brands and a lot of brand loyalty. But I think as consumers start to shift from gas-powered to electric and look at the specs of the different cars," says Wood. She said that although they might still be persuaded by brands only, they won't have as good an electric vehicle as Tesla will provide. Cathie Wood's strong conviction in Tesla's future is supported by her actions as she keeps loading up on Tesla shares even as a relentless sell-off drags down her flagship fund. In fact, even after several dip-buying sprees over the past several months, ARK funds bought 100,982 shares of Tesla on January 10th, valued at $12 million as of that day's close. Prior to that, Wood's flagship ARK Innovation ETF purchased 145,000 shares of Tesla, worth $15.7 million at the automaker's $108.10 closing price on January 3rd, while ARK's Autonomous Technology and Robotics ETF nabbed a further 31,000 Tesla shares worth $3.4 million, according to daily transaction reports. The said purchase is valued at around $19 million. Those purchases came during Tesla's 12.2% drop at the time, its largest single-day decline since September 2020, with the stock now down nearly 75% since November 2021. You may wonder why so many investors have stuck with Wood. The fact that she had one spectacular year certainly helps. ARK Innovation skyrocketed 153% in 2020. Wood, who invests in companies engaging in disruptive innovation, made millions amid Tesla and other favorites surge in the early days of the pandemic before a brutal 2022 sell-off wiped away ARK's gains. Also, Wood has become something of a rock star in the investment world, appearing frequently in the media. She explains financial concepts in ways that novice investors can understand. According to a recent Barron's article, ARK's Cathie Wood says Tesla stock still has miles to run. Wood said that Tesla will outperform other car companies thanks in part to efficient manufacturing and the rise of an autonomous taxi. Overall, ARK's 2026 price target for Tesla stock would be around $500 per share, more than 4 times its current valuation based on its EV business alone. The projection is adjusted for the 3-for-1 stock split that became effective on August 25, 2022. This represents additional context to the 2026 pre-split price target of $4,600 the firm announced in mid-April 2022. ARK's analyst Tasha Keeney noted that the firm is removing autonomous driving and any form of ride-hail from the valuation framework. The firm believes that these two factors will drive more than 60% of Tesla's value over the next 5 years. She further noted that the $500 per share projection is more than a 4 times increase from the stock's current levels. Make sure to subscribe to this channel for more Tesla stock updates.